Okay, it's the start of the month and therefore time to plug my Patreon service. So, if I could just take a couple of minutes of your time to explain the benefits. There are free tiers available. You can follow the link in the description box of this video and any of my videos on YouTube to come over and have a read for yourself. I won't read it to you. If you were to join the top tier, tier 3 for £15 a month, you would unlock all of the 162 exclusive posts which have been posted since the Patreon began. Most recently were my top dividend stock picks for the month of November. This is a video going into detail, it's over an hour long, looking at the stock rating system which is issued each month and the dividend calendar which is issued each month, and then I go through the ones that I'm most interested in based on company health, yield and a series of other factors. And then here's the actual dividend calendar. You can download 2 PDF files here. We've got a recent live stream and we've got a recent addition to the Elliott wave theory playlist as well, looking at channels. I mean, if we come over to that now, this has now become a bit of an epic series. It's now 14 videos long and it will basically teach you Elliott wave from scratch. You'll have a pretty solid understanding of it by the time you've gone through all of these. I'm always adding to it. We also have several other playlists as well, looking at trading, basic technical analysis, how to use TradingView, some deep dives and other things like that. So thank you very much for listening. Please consider signing up. We'd be very glad to have you. And yeah, let's get back to the video. Cheers guys. Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, just a quick update on XRP. There's an interesting little pattern I've noticed in the very recent price data, so I wanted to go over that. We're going to look at the primary bearish count and we're going to look at a possible bullish count as well. And yeah, that's it basically. See how things look. So on the longer term, from 2013 to the 2017 high, I think was a primary wave 1. We had a brief primary 4 at intermediate degree in here. It's quite common to see small wave falls in crypto. We then had a long correction into the bottom at 2020 in March, which was the primary 2. We've then put in a leading expanding diagonal into an intermediate 1, and then we've got a double zigzag down into intermediate 2, expecting the price to come lower. That's the bearish count. Bullish count is that we actually have, if I just turn those off so we can make it a little clearer, is that we actually have a single zigzag down that's already complete, and this would be the same intermediate 1 into 2, 3, 4, 5. We do potentially have a bullish count off of the low down here, so we'll look at that. And that's really the only thing that I'm interested in at the moment, whether or not that invalidates or whether that plays out. So let's come in now and have a look. Let's put this with the, what did I say this was? The zigzag, there we go. I'll lock that in place for the moment. And let's just zoom down and have a look at the primary count a little bit closer up. So assuming that we had this expanding leading diagonal, which I feel when we come down and look at it in the line graph on the weekly time frame, it looks a lot more convincing because we don't have that huge wick on the 4th wave here. And we also, if we bring in the wave 1 to the wave 3, we actually get an overthrow now, or a throw over we should say. Now, not that common in an expanding pattern. We tend to fall short of the line, but a throw over is a throw over, and it's perfectly permissible in both diagonal patterns, contracting or expanding. It's just more common in a contracting pattern than it is in a expanding one. So let's come down to the 8 hour for a minute. We'll come back onto the chart here. So I was thinking that the way this works is we've got an ABC into a W. This is a zigzag. We get an ABC with 5 waves in the C into a flat. This is our X. We then get a double zigzag here, W, X and Y, for a minute wave W. So we get a double zigzag into a double zigzag inside of a double zigzag. I know, it's a bit like that. Here I've basically gone W, X wave triangle, and then I've gone A, B, C for a larger zigzag down into the Y of the 2. And the way I would interpret the current price data if I was being bearish And although I say this is a primary count, I have to be absolutely honest, I'm not particularly confident in it any more than I am with the bearish one, the bullish one I'm going to show you in a minute. I think both should be observed, and either is possible. So, saying that this is a W, X, and a Y here into a B wave. This is A, this is B, and now we've gone 1, 2, 1. Flat into a 2, and now we're going to go 3, 4, 5, 3, 4, 5, and we're going to come racing down here and make new lows, well, new recent lows, that is from the June low back here. So that's a bearish count, and essentially if we see price break down more aggressively from here, then we're looking to basically take out that June low, and we're looking for an extension of the wave 3 to break down here inside of the C, inside of the Y, inside of the Y. But that's not really why I'm looking at this video today. What I find interesting is this here potentially is a series of 3-wave structures, and it's potentially a triangle. Okay, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, and even a little short 1, 2, 3 to here. So this allows us to interpret it bullishly. So if we bring up our zigzag count where we complete down here in the wave C, and then we can combine that with our impulse on the short time frame here, we have to come off of log into linear here to appreciate how this channels. So what this gives us is an impulse into a 1, and then we get A, B, C, A, B, C, expansive B, and then A, B, C, 1, 2, 3, 4, 5, contracting, ending diagonal in a C of a 2. So we've got a 1, flat for a 2. I can't really clearly get the subdivision to work here in the 3. That's one of the problems with this count. I feel that the fourth waves are so brief in here that they don't show up on anything other than sub 1 hour chart. But from here we go from 1 and the 2 to find the 3 to find the 4 at the edge of the channel. So 1, 2 edge of the channel, 3 edge of the channel, 4 edge of the channel, to find the 5 up here to give us a 1. Okay, and this will be a bullish count, and this is A, B, C, D, E. And very, very simply, if we take out the A wave, because I'm not sure whether this is A and then B and then A, B, C inside of the A here, which could take out this temporary C low. So I'm going to just say that the bottom of the A here is invalidation for a triangle pattern, because we can't come below that. So we've got 2 invalidation points. The first invalidation point is a wave 4 invalidation point. The wave 4 overall cannot come below this level because it interferes with wave 1 price territory at that point. Now people might say, well, what about the B wave top? That isn't wave 1, that's wave 2, right? That's an expansive wave 2. The 1 is what matters. The 4 can't come into that territory, so we can't come below 0.38709. If we do, that would be a feather in the cap of the bearish count, suggesting that we're going to go lower. So that's something to watch for to help confirm the bearish count. And then this is something to watch for if we confirm the bullish count. We stay above this level, and let's just get that precise inserted here. That's a 41704. Okay, stay above that. And if we have completed all 5 waves of the triangle, A, B, C, D, E, then we will come out of here 1, 2, 3, 4, 5, 1, correct, and then we'll start moving up to get that 5th wave. It could be quite brief, 1, 2, 3, 4, 5, new high, doesn't have to come to the edge of the channel, and that could be your wave 1, and then big correction into a 2, which won't come back below the June low, and then off into a 3. So there is genuine potential for it to be bullish at the moment. It's not pretty, but then again, neither is the bearish count, to be absolutely honest with you. I'm a long-term accumulator of XRP, putting my cards on the table, have been since 2014, and I still believe that when the SEC and when the lawsuit is resolved, we might not get the instantaneous rally that everyone's expecting, but we will get a subsequent rally sooner or later afterwards, which I think could be very aggressive. Now, it could be enough that we get that wave 1, right? We get that pop to wave 1, and then we get that surprise wave 2 retracement, which has everyone very gloomy, which is like, oh, it hasn't worked, nothing's going up, you know, it was all a waste of time. And then we come into the 3 and that blows everyone away, and you know, we're off to the races, big time styly. So that's the way I see things at the moment. If we just switch off all our Elliott wave count for the moment, and we'll do a little bit of classical analysis before we wrap things up. Like I said, nice brief video this one. So let's come out to the weekly time frame. Let's go back into log for a moment so we can get a better picture of what's going on. And let's just randomly doodle on the chart for a laugh. There we go. So let's bring up our moving averages first. At the moment, on the weekly time frame, we're testing the 60 exponential moving average. We tend to, when we are completing a larger wave degree, we tend to bottom below the 250 exponential moving average after crossing the 60 and the 250. It's common in all markets that I observe with enough price data, enough history, to get this completion at a larger wave degree. This is 1 into 2. Okay, so we've come down here below the 250, we've come back up above it, back tested the 60, fallen below the 60, back tested it to the upside, and then fallen below the 250, and now we're back testing the 250, and the 60 is essentially what we're doing. So this could be another larger wave degree completion. That's what we're saying. 1 and 2, 1 and 2. If we measure these in time frame, we can see that we get a 798 day correction, and then we get a 427 day correction. We get a 96.57% decline in price, and we get a 85.41% decline in price. So as you can see, these are perfect examples of a larger wave degree, deep decline below the 250, 96%, and a slightly smaller wave degree doing the same thing again. 85% for an intermediate wave 2, 96% for a primary wave 2, 700 plus days, 400 plus days. This seems perfectly adequate to me, you know, to consider that these are indeed nesting structures, 1 2 1 2, before we go off into that wave 3. So now what we're looking for is essentially 5 waves up to complete, and this will be another one into another 2, and then you could argue for 3, 4 and 5 into yet another 1 and another 2, right? And it could be 1 2 1 2 1 2, and then we go into the 3 of the 3 of the 3 out into the next year or so, or a couple of years time. Or you could argue that we're already going to progress as 1 2 3 4 and 5 into the corresponding third wave at this degree, okay, and go much higher. That's a possibility as well, but we've got a lot of ground to cover between now and then. Okay, so now let's have a look at our indicators for a moment on the weekly. Alright, so corresponding with the move below the 60 EMA and 250 EMA on the weekly time frame, we get corresponding oversold conditions. So we get a double touch of oversold here in the 2020 low, but we come to much greater extremes here in 2022. Right? So we go from overbought to oversold, overbought to oversold on the weekly time frame. The idea of 1 2 1 2. Now we could come down again deeper into another deeper 2. We can't come back below this low here though, because that's where we're saying the wave 1 began. So there's always potential for a deeper move lower. That's what the primary bearish count is saying. But like I said, I'm not particularly confident in that. One thing I have noticed though, as opposed to some of the other alts which have been much more aggressive over the 22 to 2021 period, is they're still very much trapped below underlying trends in momentum and volume, whereas we're not here in XRP. Let me show you what I mean. So if we drag down a line here across these series of lower highs in the RSI, we've had this first move up. Now if we're expecting a move back into overbought conditions, then a move through and back could be our 1 and our 2, and then we thrust into overbought, excuse me, Freudian slip, and then we'll get above that 60 exponential moving average and that 250, then we'll come back to test all that structure, and then we'll move on again. We can see the same in the MACD, and we can see the same in the OBV, this series of downward lower highs in the OBV. Now we can't say it's a break of trend yet. I mean, we've broken that downward trend, but we haven't set a new high yet. We've still got the high here, which is just above where we are, but if we break that, we would have officially broken this downward trend of low, lower high, lower low, lower high. We would now have a new high, and then we'd be looking for a new higher low to confirm. So we've still got work to do, but it is kind of looking positive on that regard, having come to oversold conditions. If we just come down to the daily time frame for a moment and have a look how things are looking over here. Right, we can see at the moment just kind of hanging around the zero bound on the MACD on the daily time frame, hanging around neutral territory on the RSI. Haven't reached oversold conditions here. If this is a wave 4, I wouldn't expect necessarily to get to oversold conditions in a sideways structure like a triangle anyway. So a return to neutral, that seems to fit, but we have got to rally from here. On the daytime frame, we can see quite clearly that we've been testing with 250 exponential moving average on the daily. Okay, this is providing resistance. The 60 was providing support until this break. A move back through here to get that fifth wave of a 1 is what the bulls really need to see here. If we break down through that prior level into that wave 1 territory, that's bad news for the bulls, because I can't see a completed 5-wave structure without a further move higher. I think we need to see that. So on that note, let's have a look at what we've retraced from a Fibonacci perspective. So we're looking for 23.6 to 38.2. Okay, and we want to come off of log for this. Now you can see here we've come quite deep for a wave 4. We've gone through the 38.2, through the 23.6, and we've come to the 50, and we've wicked through it, but bodied above it. 50, bodied above it, wicked to it, wicked through it here, bodied above it, wicked to it here, through it, and currently bodying above it, but it is looking weaker at this point. We really do need to get out of here before invalidating that triangle structure if we want a bullish count. If not, I think the idea that we're just going to do this is more likely. Okay, overall, let's have a look at just how much we've retraced overall of this whole move. We're going to have to come back into log to do this. So from the low, this is back in March 2020, to the high. Let's bring out our wave 2, 50 in golden zone. We can see we're well below the 50 in the golden zone here, so let's bring in our wave 2. We're on log scale, we're hanging around the golden zone, the 61 to 65. But what we want to do is we just want to adjust this for linear, and we can see that we're at the 89% retracement, which unsurprisingly is also a very strong prior support level. So if we look at this previous level here, let's have a look. We've got highs, resistance, 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 and now operating as support in this horizontal line here, and that's right on the 89% retracement. So you know, it's a fib number. I use it because it's a fib number, the 89. I know we traditionally say 90% retracement, and it was slightly more than that. So we've done plenty. We've come down deep. We don't really need to come down any deeper to get a wave 2 at this degree. So that's really all I've got for you guys now. We're looking to see if we can get a move out of here. We've had, in this move off of the low, let's just come down to the 2 hour, I think would be appropriate. Let's have a look at the volume. 4 hour then. Right, so we can see the volume at the highest peak gets underway at the low of this smaller swing, high swing, low here. So we do see volume overall increase during, on the daily time frame, the peak of this wave 3. So let's just single that out, the vertical line here, like so. So there's the peak of the wave 3, there's the peak of the volume. That fits. Declining volume through the 4, and now the 5th should display some volume, but it shouldn't be as strong as the 5th. And the same with our momentum indicators as well. We should probably build up some kind of divergence into that 5th wave. Okay, as all it needs to do is make a new high. Now it could be stronger because there's no real sign of an extension here in the 1 or the 3, so maybe an extended 5th could occur, in which case in that circumstance we could see more strength than we would normally expect in the 5th wave. But we do get a peak of the volume here, so that suggests that that could be a wave 3. If we look at where it comes to from a Fibonacci extension point of view of the wave 1, here's the 1, from the 2, let's bring up our fib for our wave 3 extension. We can see that it bodies exactly at the 1618, exactly at the 1618. Right, the wick goes higher, so we come to a wave 3 target and we begin to consolidate. We already know that on linear, that was a log scale measurement. On linear, we actually go beyond the 1618. We don't quite make it to the 2618, and we also know that we channel quite nicely, from what we've seen. So let's just remove these fibs, get rid of those moving averages, bring back that impulsive count, and there it is, channeling quite nicely. 1, 2, 3, 4. So that's it, guys. I'm going to leave you there and say the things you want to watch for. Basically, you want to see if the triangle invalidates first. Did I pick that up? I didn't delete that, did I? There it is at 0.41704. If we break through that, then this triangle structure is incorrect and we're more likely to head lower. If we then invalidate the wave 1 at 0.38709, then we're definitely we definitely don't have an impulse coming out of here, and we're far more likely to be bearish at that point. Right, guys, thank you very much for joining me on this technical analysis of XRP. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon subscribers. Your support is massively appreciated. If you're interested in joining the Patreon, there's a link in the description box below. Head over, have a read of the tiers, and see if you're interested in joining up. Still early in the month, so a good time to do it. And if you're not following me on Twitter, there's a link to my Twitter feed as well, where I post the new videos in case people miss their notifications on YouTube. Alright, guys, take care of yourselves, and I'll be back with you with a Bitcoin video very soon, probably tomorrow. Take care, bye bye.